Welcome back to Earnings Digest, the show that brings the economy and markets right to your earbuds.
Right to your earbuds, exactly.
You know, sometimes it feels like the markets move faster than a really fast thing.
Faster than a caffeinated hummingbird.
Uh-huh. There you go. And with all that speed, trying to keep up can feel impossible.
That's what today's deep dive is all about.
Buckle up, folks.
Because we're talking about how AI is changing the game, and not just a little bit. This is about how artificial intelligence is making trading faster, way smarter, and yeah, even more profitable for those in the know.
We're going to break down exactly how AI is crunching numbers, making lightning-fast trades, and maybe even, just maybe, predicting the future.
And we can't forget the risks, right?
Yeah.
Because with great power comes, well, So stick with us as we explore the exciting and maybe a little scary world of AI on Wall Street.
All right, so let's dive right in. Think about this for a second. Every single day, the market is bombarded with mountains of data. I mean, mountains. Earnings reports, news articles, social media chatter, global economic indicators, the whole shebang. I get a headache just thinking about it.
It's overwhelming. And for a long time, Stark analysts tried to keep up using, let's just say, less than ideal methods. Spreadsheets, late nights, lots and lots of coffee.
You're telling me. Sounds rough.
It was. But here comes AI, the knight in shining silicon armor, ready to rescue us from the data deluge.
Okay, so less coffee, more AI.
Yeah.
I like it. But seriously, how does AI actually handle all that information?
Think of it like this. The human brain, impressive as it is, can only process so much information at once. AI, on the other hand, has a superbrain. It can devour massive data sets in the blink of an eye. And not just devour, it can actually make sense of it all, spotting those hidden patterns and correlations that would take human analysts weeks, months, maybe even years to find.
So AI is like the Sherlock Holmes of the stock market, finding clues that we mere mortals would miss. But here's the thing I always wonder. Does all this data crunching actually give investors an edge, like a real tangible advantage?
Absolutely. It's like having a superpower. Think about algorithmic trading, for example. You essentially program a set of rules based on your investment strategy and then let an AI loose to execute those rules. But it does it with superhuman speed and precision. We're talking milliseconds here.
Milliseconds? That's insane. No human trader could ever react that fast.
Exactly. And that speed can be a huge advantage. It allows these algorithms to exploit tiny inefficiencies in the market, pounce on fleeting opportunities that disappear in a flash.
So it's like a high-speed game of chess, but with millions of dollars on the line. Sounds exciting, but also a little terrifying. What about those stories we hear about flash crashes, where algorithms go haywire and send the market into a tailspin?
You're right to be cautious. Algorithmic trading does have its risks. When multiple systems react to the same signals at the same time, it can create a sort of domino effect, amplifying market swings. It's like a herd of spooked gazelles all running in the same direction.
So AI can be a force multiplier, for better or for worse.
Yeah.
That's a lot of responsibility. But you mentioned something earlier about AI actually helping to manage those risks. How does that work?
Well, remember how we talked about AI being a master at spotting patterns? That same ability can be used to identify and prevent fraud. Think about Bernie Madoff, for example. His whole scheme relied on hiding his tracks, blending in with legitimate trades.
Yeah, he got away with it for years. But AI could have caught him.
It's very likely. AI systems are now being used to analyze trading data in real time, looking for anomalies that might signal market manipulation or insider trading. They're like digital detectives, constantly on the lookout for anything suspicious.
So it's like having a watchdog watching the watchdogs. That's reassuring. But let's move beyond just playing defense. How can AI help investors actually find opportunities in the market?
Predictive analytics is a great example. It uses historical data and complex algorithms to try to, well, predict the future. Imagine trying to guess whether a stock will go up or down based on its past performance, news sentiment, even the overall economic climate. It's a tough call, right?
It's practically a guessing game.
For us humans, maybe. But for AI, it's all about crunching the numbers. AI can analyze all those factors and spit out a probability score. Think of it like a weather forecast, but for stocks. It tells you how likely it is that a particular stock will rain profits or pour losses.
So it's not about replacing human judgment, but rather giving investors more data-driven insights to work with.
Exactly. It's like having a superpowered research assistant by your side.
But let's be honest, trading isn't just about cold, hard data. Emotions play a big role. Fear and greed, especially. How does AI factor that in?
That's actually one of the biggest advantages of AI-driven trading. By automating decisions based on predefined rules and data analysis, it completely removes the emotional element from the equation. No more second guessing, no more impulsive trades driven by fear or greed.
So it's like having a robot therapist telling you to take a deep breath and stick to the plan.
Exactly. And that emotional detachment can lead to much more disciplined and consistent trading, which often translates into better long-term returns.
Sounds almost too good to be true. But there's got to be a catch, right? What about the ethical implications? If we're handing over our investment decisions to algorithms, who's really in control?
You're hitting on a really important point. As AI becomes more sophisticated, we need to think long and hard about transparency, accountability, and the potential for unintended consequences. What happens when everyone starts using the same AI-driven strategies? Could that create new systemic risks in the market? These are questions we need to answer.
It sounds like we're just at the beginning of this AI revolution in finance. It's exciting, it's a little scary, and it's definitely something we all need to pay attention to. But before we go, what are some of the trends on your radar? What's the future of AI in investing look like?
I think we're going to see even more personalized investment strategies, powered by AI that understands your individual risk tolerance, your financial goals, even your ethical preferences. Imagine an AI that builds you a portfolio perfectly tailored to your values.
That's amazing. It's like having a personal financial advisor in your pocket.
Exactly. And I think we'll see even more sophisticated risk management tools that can anticipate and mitigate potential market disruptions. AI could be the key to creating a more stable and resilient financial system.
That's a future I can get behind. All right, so as we wrap up this deep dive into the world of AI on Wall Street, I want to leave our listeners with a question to ponder. What do you think the most significant impact of AI on the stock market will be? Will it democratize investing, giving everyone access to these powerful tools? Or will it create a new breed of super investors who can outsmart the market with the help of AI? Let us know your thoughts, and as always, stay tuned for more deep dive into the future of finance.
See you next time.
Bye, everyone.